We often think of the U.S. Treasury market as this incredibly stable force in the financial world. Predictable, almost.
Right, rock solid.
Exactly. But recently, well, we saw a jolt that really got people talking.
You mean the 30-year yield jump?
Yeah, the 30-year Treasury yield jumped a significant 46 basis points in just 1 week back in April.
Which, just for context, is huge. A basis point is tiny, 1/100%. So 46 is, well, it's the biggest jump like that in nearly 4 decades.
4 decades. That kind of volatility, I mean, in such a foundational market, it definitely signals some pretty important shifts are happening.
It absolutely does. And that rapid change in a market that's typically known for its stability really highlights the need for exploring new approaches, new potential solutions. And that's precisely what we're going to be diving into today.
Exactly, because right in the middle of all this, a really interesting development has popped up. A new way of maybe looking at how Treasury assets can operate.
You're talking about VanEck.
We are VanEck, a name many of you will probably recognize. They're a pioneering global investment firm.
Right, long history.
Yeah, long history of being forward-thinking, especially with innovative financial products, like ETFs, and spotting international market opportunities early on.
VanEck has definitely built a strong reputation for, well, innovation. And now they've partnered up with Securitize
Okay.
to launch something quite novel, VBILL.
VBILL. So
Yeah.
what is that exactly?
It's a tokenized U.S. Treasury bill product.
Tokenized. Okay, let's break that down quickly.
Sure. It essentially just means representing ownership of an asset, in this case, a T-bill as a digital token on a blockchain.
Got it. And Securitize.
They're a leading platform in this whole real-world asset tokenization space.
Yes.
Pretty big player, actually. They manage over, I think, $3.9 billion in tokenized securities already.
Wow. Okay.
And they've worked with major names before, like Apollo and BlackRock, so that certainly adds some credibility here.
Okay, right. So we've got this moment of significant change in the Treasury market, volatility, and now this new product, VB, from a well-established firm, VanEck, partnering with a key player in tokenization, Securitize.
That's the setup.
So our mission today, as you might guess, is to really unpack why this launch is significant. What does it mean?
Yeah, what does it suggest for the broader financial world? And crucially, how does it tie back to those challenges we're seeing right now in the Treasury market?
Exactly. Think of this as your shortcut, your way to get a solid handle on this really fascinating and potentially important development.
Okay, so where should we start? Maybe with the problem itself.
Yeah, let's dig into the core issue first.
Yeah.
This growing problem of illiquidity in the Treasury cash market.
Right. It sounds technical, but it's not just an abstract concern for, finance pros. It has real implications for how smoothly the whole financial system actually runs.
Right, and the information we looked at really underscores how serious this is. Apparently, recent measures of this illiquidity have been getting close to or even exceeding levels we saw during the banking stress back in March 2023.
Which wasn't that long ago, and it was a pretty worrying time.
Exactly. That really puts it in perspective. This isn't just some minor fluctuation. There's a clear and urgent need, as our sources put it, for solutions.
And that's where VBILL slots right in. VanEck's move, tokenizing Treasury assets. It seems like a direct response to these very illiquidity issues.
Okay.
What's particularly interesting is the how, the mechanism.
Right. How does tokenization actually help improve liquidity here? What's the connection?
Well, by bringing Treasury assets onto the blockchain, they're aiming to introduce some, let's say, much-needed efficiency into this massive market.
Efficiency like speed or access?
Both, potentially. Tokenization enables the possibility of trading, like, around the clock, 204/7.
Ah, unlike the traditional market hours.
Exactly, and potentially with fewer intermediaries involved in the whole transaction process.
Well,
Traditional Treasury markets, they have set hours, settlement procedures. Sometimes that leads to delays, higher costs.
right. The plumbing can get clogged sometimes.
Sort of. Blockchain technology, well, in theory, it can streamline those processes, make trading more seamless, more continuous.
And continuous trading could mean prices adjust faster.
That's the idea. More efficient price discovery. Market participants can react to news in real time, potentially reducing those weird arbitrage gaps and just making the market work better overall.
That makes sense. It's like taking something that operates on a 9-to-5 schedule and giving it the always-on, faster pace of the digital world. And it's interesting, too, that this isn't happening in a vacuum, right? Our sources mentioned Treasury Secretary Bessent focusing on market reform.
Yes, there's regulatory attention on this.
And even banks are apparently pushing for eased leverage rules to help support market functioning. So VBILL kind of fits into this broader environment of seeking solutions.
Precisely. It's part of a much larger discussion, a larger effort to address the pressures building up in the Treasury market.
Okay, so we've established the problem. Illiquidity is a real concern.
Urgent, even.
Urgent concern. So now let's pivot to VBILL itself and the technical side, the innovation it represents as a potential solution.
Right. And the first thing that jumps out is its simultaneous launch across not one, but 4 major blockchains.
4. Which ones?
Avalanche, BNB Chain, Ethereum, and Solana, launching on all 4 at once. That's a really significant technical undertaking.
Wow. Yeah. Launching across 4 chains like that sounds complex.
Yeah.
What was the thinking there? Why not just pick one?
That's where this interoperability piece comes in. It's powered by something called Wormholes protocol.
Wormhole. Okay, what did that do?
Basically, Wormhole acts as a kind of bridge. It verifies transactions on one blockchain
Okay.
and then allows a corresponding representation of that asset or data to be created on another blockchain, all without needing some central middleman.
So it connects them, like a universal translator for these different blockchains.
That's a good analogy, yeah. It facilitates communication between these otherwise separate ecosystems.
So it's not like they're just creating 4 separate VBLs that can't talk to each other.
Exactly right. This multi-chain approach, it's all about maximizing accessibility, giving users flexibility.
Letting them use the blockchain they're already comfortable with, maybe?
Precisely. Operate within whichever environment they prefer. It just broadens the potential user base significantly.
Okay, that makes sense. But we noticed something interesting. The minimum investment amounts are different depending on the blockchain.
Ah, yes. Good catch.
Why is that?
It seems to directly relate to the different transaction cost profiles of each network.
Transaction costs.
Yeah.
You mean like gas fees?
Exactly, gas fees. So for Avalanche, BNB Chain, and Solana, the minimum investment is set at $100,000.
Okay.
Whereas for Ethereum, it's $1 million.
That's a big difference.
It is. And it likely reflects those different gas fees or transaction costs you pay to use each network. Ethereum historically can be more expensive for transactions.
Ah, okay, so it's a practical decision based on the underlying tech and the cost of actually using each chain. Makes sense.
Mm-hmm. And our sources even gave a relevant data point on that. They mentioned Solana's pretty impressive revenue generation in Q1 2025.
Oh, yeah? What did it say?
It apparently surpassed even Ethereum and BNB Chain in revenue during that period.
Interesting.
Which likely played a role in its inclusion. It offers potentially a more cost-effective option for users making these kinds of transactions.
So VanEck's being strategic about which chains offer the best balance of tech, access, and cost.
Seems that way, yes. Balancing capabilities with user accessibility and cost efficiency.
Okay, so that's the tech side. Now, let's maybe zoom out a bit. Take a step back and look at the bigger picture here. This whole developing market for tokenized securities.
Good idea. Because VBILL isn't happening in isolation. It's part of this larger trend.
Right. So what does that landscape, the tokenized securities landscape, look like right now? Is it big? Small?
Well, currently it's still pretty early days, still developing.
Okay.
Our sources indicate that tokenized stocks, for instance, had a cumulative market cap of around $350 million as of mid-April 2025.
$350 million. So compared to traditional markets, that's, well, it's still relatively small.
Tiny, really, in the grand scheme of things.
But the future potential.
Yeah.
That seems to be the big story. We've heard a lot of buzz around tokenization.
Oh, absolutely. The projections are ambitious. Industry forecasts suggest the sector could potentially reach $1 trillion.
$1 trillion. Wow.
In the near future. That's a huge level of expected growth.
Okay. And so the launch of VBILL, how does that fit into this growth story?
Well, having a traditional established player like VanEck step into this space with a product like VBILL that acts as a really significant catalyst, potentially.
How so? Like it gives it a stamp of approval?
Sort of, yeah. It potentially brings a greater degree of legitimacy, maybe visibility to the whole tokenization concept, especially in the eyes of more traditional investors who might have been skeptical before.
So having a name like VanEck involved is key to maybe pushing this towards the mainstream, lending it credibility.
It could certainly help. It's a signal maybe to the more established ports of the financial world saying, hey, this is a space worth paying attention to. And if we look even broader, the global security token market, That was valued at nearly $2 billion back in 2024.
Okay.
And it's projected to grow to over $17 billion by 2033.
17 billion. That's a pretty steep growth curve.
It is. That kind of compound annual growth rate, it clearly indicates strong institutional interest is building in this area.
So VanEck isn't just dipping its toes into some niche experiment here. They're potentially positioning themselves inside a market that's expected to expand significantly.
Exactly. And the implication, the ripple effect, is that VanEck's move could very well encourage other major asset managers to think, maybe we should be developing similar tokenized products too.
Right, a follow-the-leader effect.
Could be. And that kind of activity could seriously accelerate the projected growth of the entire tokenized securities market.
Okay, wow. So let's try and synthesize all of this, bring it together.
Let's do it.
We started by looking at a, well, surprisingly volatile treasury market facing these illiquidity issues.
Right. The core problem.
Then we examined VanEck and Securitized launching VBILL as a direct response to that.
Using that cross-chain tokenization tech.
Using cross-chain tech potentially to enhance liquidity and efficiency. And finally, we've kind of positioned this whole thing within the context of a rapidly growing tokenized securities market.
Where VBILL's arrival could actually be a pretty important turning point.
Yeah.
That sums it up pretty well. VBILL represents not just a potential fix for specific issues in the huge U.S. Treasury market, but also a potentially significant step forward in the wider adoption, the wider development of tokenized securities generally.
And for you listening in, hopefully this deep dive has given you a clear, efficient way to understand what's going on with this complex but increasingly important development in the financial landscape.
It definitely seems like something to keep an eye on, which maybe leads to a final thought for you to chew on. With these traditional financial markets and blockchain technology intersecting more and more, what other types of assets, what other asset classes do you think are really ripe for tokenization next? And maybe more importantly, what impact could that actually have on how we all invest, how we manage our finances, in the years to come?